Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Shawn Cruz. He's the Manager of Trading Services over at TD Ameritrade with our midday update. And stocks having a pretty bad reaction to those trade headlines, Shawn, and something that you and I have spoken about a number of times where phase one's the easy part. Phase 2 and 3 is where it gets hard, and it looks like this is going to go into at least 2020 into the election.
I think that was something, I wasn't too surprised by this. Phase 1 is theoretically supposed to be the low-hanging fruit to get done on a trade deal, and we still haven't been able to get anything concrete actually written down. We've been hearing we're close, or it's right around the corner over and over again, and hearing today, it sounds like there's really no rush to get things done, and I think that's because they're hitting more roadblocks in phase 1 than they initially expected. So now phase 2 and 3, those are probably going to be even more difficult to get through, which means they're going to take even longer. I think what the administration was doing today was coming out and saying, if you think you're going to be able to force us into a corner where we just take a deal just so we can get one because you need something done before the election, that's not going to be the case. We're happy to wait until afterwards. So I think right now it puts those December 15 tariffs, those are back on the table, and those aren't the only tariffs we've been hearing about today.
Oh yeah, and we'll get into that in a minute, but first I want to pull up a one-year chart of the VIX, because while we're talking about stocks having their worst couple of days in the past 2 months, I mean, just last week we were talking about stocks hitting all-time highs and all-time highs day after day. Do you think the reaction has been muted or right on point where it should be?
I think it can. I think it's where it should be for now, but I think it certainly can escalate further. And so if you look here, we sort of coiled when we were at these lows earlier on the year, then we had a spike. We had a very similar effect in the July-August time period where we were at low levels, kind of packed in there, and then we broke out once trade talks started to break down again. And if you look right around that November time period, we almost had the exact same thing happening once again, and that was vol was really getting pushed down and compressed around that 12 handle. I was surprised to even see it get below 12, to be quite honest. But now you're starting to see these trade deals fall apart, and it looks like there's a similar pattern establishing itself here. I think if you see a further escalation of the rhetoric around trade, you're going to see VIX 1 move higher, but you can also see markets pull back a little further as well.
All right, now the administration is fighting a trade war on 3 fronts now. You had news come out with France this morning and South American tariffs yesterday. Is that a signal that the administration is saying to China that we're not afraid to put tariffs on and we'll do these on our own terms?
I think as it relates to China, that the South American tariffs there's a much easier connection to make there, and that is a lot of demand for U.S. agriculture products that China has shifted away. They've started filling that out of South American countries. And so what the administration has come out and said is, look, you're keeping your currency low to drive up demand for your aluminum, for your steel, whatever that may be. But they're also, the side effect of those currencies being low is that their agriculture goods are also relatively attractive for a company like China to come in and buy. And so if you're thinking about how this can really play out in the long run, once those supply chains start to shift and they switch sourcing to South America, it's much more difficult to bring that back. So let's say we do get a trade deal, maybe if you're thinking part of that trade deal is going to be some relief in the agriculture space, that may not be true if the sourcing is already shifted to South America, and that's where it's going to stay.
Well, I think also when you take a look at the South American tariffs as well, there's a reason why their currency has been devalued and is lower. I mean, there's a lot of political unrest there. I'm not sure if it was necessarily devaluation in terms of trade versus actually happening on the ground there. Yes, all right, speaking of supply and demand, OPEC, let's move along to that. Keeping those cuts in place.
Normally, I would actually expect to see crude oil down much more than it is today, and we've talked about this before, because so much of economic growth and activity globally, you need oil to do that, whatever that may be. We're still very crude oil-driven economies around the world. So typically, when you start to see this whole trade tariffs start to pick back up, and now we've got them with South America, we've got some news heating up over in Europe, you see crude oil sell off a little bit off the outlook that maybe this is going to hamper global growth and there's not going to be that demand for oil. The reason why it's not selling off today as much as you would typically see in the past when you get these types of news around trade is that OPEC is meeting this week and they're expected to maybe bring those cuts up a little bit more, bring in more oil offline. So it's the supply and demand may not get thrown as out of whack as you would typically see being marked. But that's something to keep an eye on for oil, because oil really hasn't responded to too much news this week. but it could later on this week when we start getting headlines out of OPEC, so it's something to watch.
All right, now if it's risk off on Monday and Tuesday, clearly there's movement in the treasuries.
Yeah, and I think one thing, if you looked at what was going on with treasuries actually sold off when we saw yields rise on Monday going into the opening of trading. And the reason was overnight, you had some pretty positive data come out of China and some positive data come out of the Eurozone. So I think you saw maybe a little bit more of a risk on type of appetite, money coming out of treasuries and going into some of those riskier assets. Now that we've got the escalation of trade with China, we've also got Europe and South America getting brought into the mix. It's causing that flight back into those safe assets, and you're seeing an incredibly strong rally in treasuries today. 10-year yields back down towards those lows we really haven't seen since the beginning of November, and you're seeing the only sectors that are really doing well today are going to be the sectors that benefit from interest rates going lower, and that's going to be real estate and utilities. They're the only ones that are really having a somewhat decent day today.
And to wrap up here, as if it's not a busy enough week, we have the jobs report on Friday. What are you going to be looking at?
I'm looking at the headline number, 180,000. We finally have the GM strike passes, so those GM employees are going to be included in this number once again. Manufacturing, they're actually expecting a build of 20,000 jobs in the manufacturing sector. If you look at what we saw from the ISM, that drop in new orders, I don't think if you're expecting less orders coming in the future, you're going to go out there and do much hiring. So that manufacturing number to be something to look at. And then for the consumer, we're going to be looking at aggregate income, trying to see what hourly wages are doing and seeing if that's going to be strong enough to support a healthy consumer going into 2020. Because later on that morning we get consumer sentiment, and I'm going to want to see what the consumer expectations component is, if they're still feeling optimistic or if it's starting to soften up a bit, because I think that's going to set the tone going into 2020. And the consumer has been what's carried our economy this year, with manufacturing now being weak for 4 months in a row.
All right, all great points. Thanks so much, Shawn, as always, for joining me at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.